Hello YouTube, it's Harry from HTL Finance, so welcome back to yet another video. I haven't been good with making videos recently, haven't made one for I think about 3 months now, but thought I would jump on and just do a video just talking about the recent stock market pullback and in a different style where this is a bit more conversational, unedited, one take, straight off the dome. Probably because I can't be bothered to edit these videos. Hopefully doing it in this sort of format might mean I can get more videos out, but also I think it is quite nice sometimes to have something a bit less produced and a bit more real, where someone just shares their opinion and hopefully we can get some dialogue in the comments. But yeah, this is, what are we? We are the 10th of June. Stock market has been pretty rough since Friday, and by stock market, SP 500, obviously the Nasdaq. There seems to have been a pretty big rotation out of AI stocks, which is where me and a lot of people have been putting their money recently, but there has been quite a big rotation out of that, and there obviously has been a lot of drivers of that. There's obviously stuff with the helicopter, going on, the Iran war, which the market sort of was very bothered about, then shook it off. I think they just got tired of the news. But then recent news has resurfaced. You know, it doesn't seem like an end is in sight, and the market hasn't particularly liked that. There's obviously been stuff with the CPI inflation, which has come in line, but, you know, it's still high due to the Ram-pocalypse and other things. So there's a couple of overlapping pieces of news there, but there is obviously other things as well which have escaped me, but I think they're sort of a couple of the main ones that have come in recently. And I mean, we are where we are with the stock market. It also has to be said that the market has had a good run since the pullback, which must have been probably March or Feb. You know, we've seen a lot of gains. S&P, Nasdaq up sort of probably low double digits. They've been far ahead of the 20 DMA, 50 DMA, 200 DMA. So this really, I think, in my opinion anyway, and this is not financial advice, this is a healthy pullback. It can't go up forever. I think, you know, it did need to be pulled back somewhere close to the 20 and 50 DMA, which is now is in that sort of region, especially for the tech stocks, for the Nasdaq. So I think this is healthy. I've seen a lot of people online saying, you know that this could be going to zero type thing, that we have the massive, you know, that this is the end of it, and this is a dot-com bubble and all these things. But I think that really is overselling it. Broadcom earnings, that was another thing that happened. But I think generally we're still very early in the AI cycle. There's a lot of good revenues that these companies are making. PE ratios are elevated but not extreme. I think, yeah, this is a healthy rotation. I don't think that this pullback will last all that long. We might trade sideways for a few weeks, but I'd imagine that over time it will come back again. And I think for anyone that has dollar cost averaged, which I think is generally the go-to advice for anyone that has done that, I think this is a good time to buy. Things are cheaper now, which, as much as things are cheaper and it feels like the world is ending, prices are really only where they were about a month ago in a lot of cases. So it's not like we've had a vast, you know, stock market crash. It's really just a correction. I think Nasdaq's down about 7% now from all-time highs. So this is a good time to go in and buy things that you are confident about for the long run. And it is only really a loss if you sell at these lower levels. So I think this is a good time just to back yourself. If you have conviction for what you're buying, which you should, you know, this time is a time of value. And I guess the other thing to say is, I mean, I myself own gold and silver, or trade gold and silver, and they've been getting hit pretty hard as well. I've started selling or trimming my gold position, and silver I've held on to because as much as I mean, I think it's not far off, down 50% from all-time highs. I know gold's now below 20% from all-time highs. I think silver, should recover, or at least I don't want to sell at this level. Obviously, as a use in chips and other reasons. It obviously had a very good year last year, silver, but I'd imagine something coming again. And the same thing to gold, really. I think you're not going to see great returns on them in the short term, but I think, if you bought at a high, in a loss position, I think really you probably are best holding unless you need the money. But obviously, again, that's not financial advice. And then Bitcoin as well is having a rough time. It's at lows. I think for the last year we were about as low as it's been. And what we've seen really is a bit of a rotation into cash across the market, because stocks are down, gold is down, silver's down, Bitcoin's down, bonds have been mixed. So, it's people are obviously nervous. That's what the Fear and Greed Index is also saying. But I think it's in these times that, if you have spare cash, it's not a bad time to buy. We might not be at the bottom of this bottom, but I'd like to think we're not too far off. But yeah, that's just my 2 pence or 2 cents. Thought I would chime in, and hopefully can make some more of these videos and can get into a decent routine of them and have good dialogue. But yeah, if anyone has any questions or has any thoughts and feelings, put them in the comments below, and I'll see you all next time.